Hi, my name's Doug Ramshaw. I'm the president of Minera Alamos, a gold producer focused on building gold mines in Mexico, and I'm delighted to be sitting down with Matt again today.
Doug, lovely to see you. Good to have you back on the show. Three things I want to talk about. One, when are you changing the color of the wall behind you?
Oh dear, yeah.
We need an upgrade.
I
want an upgrade.
Burgundy red just for you.
It's too much. We need a change. Secondly, obviously, big congratulations. You got into production. It's rarefied air. Not many people get here, so well done. There's a few delays along the way as well. So, I mean, what's your thoughts about how you've managed to get here?
Yeah, I mean, hopefully we can now forget about COVID, but it did create delays. It even created a modest cost overrun because time is money. So instead of 10 million Canadian, we built a gold mine in the middle of a pandemic for 10 million US. Really a testament to our team down there. We were about 6 months behind schedule. Mining started in June as opposed to right at the beginning of the year. So, we were slap bang in the middle of the rainy season. I think I was talking to you about that a couple of months ago. That fortunately passed, and leaching commenced end of August. And we're seeing very, very good early leaching results. And during this ramp up phase, that's more critical to me than, the slow and steady build up of mining rates. So it's been a fantastic journey.
Okay, so the nice headline, Santana project achieves first gold production, but it's about sustaining it, it's about building it, and it's about making money. So can you give some thoughts about what Santana's actually going to be able to do for you in 2022?
Yeah, I'm hoping very early on in the new year we'll declare commercial production. Commercial production, I think, for heap leach is a kind of a double metric to get there. It's not just about your leach curves and your recoveries. You've also got to get your mining rate up to a sustainable level as well. I don't think it's quite the same as looking at a milling operation and saying, oh, we're up to 80% of nameplate capacity for 60 days commercial production. For us, consistent mining, and we're seeing a ramping up of that over the last few months, along with the recoveries. So maybe we could declare a little December-ish, but I think it will be a new year thing. And then first year production at Santana is modest, is probably in the 30,000 ounce range. The key thing though is we are already, as of October, I think at the operations level, we're making net cash. And we normally think of that as probably a 6-month process. To get to that point, we've done that within about 4. So we're ahead of schedule on the ramp up. Next year, we'll be making money and looking to reinvest that in growing that starting production base.
Right, okay, so that's worth being clear about. So it's net on the project, at a project level. You've got 2 other projects. Have your plans changed since we last spoke about how you move, well, certainly one of them forward?
No, I think Cerro de Oro will, all being well, we should get our permit applications in around year end. It's been a couple of months delay on that as well. I hate delays. I think that's been the worst thing about the pandemic is we used to be incredibly accurate with our guidance, and fluidity entered the world in all manner of aspects. So I'm looking forward to getting back to that. The fact that we're ahead of schedule on Santana is a breath of fresh air, really, against our timeline. So we're ahead of schedule. So that's good. Cerro de Oro, hopefully we can be close to starting construction there towards the end of next year, and it can come on stream sometime mid-2023. So that's now suddenly we can be a 2-mine operation, and it's no bad thing because we can get a few more extra quarters of finances coming off Santana to help support both those activities at Cerro de Oro and obviously inward investment into the Santana project too.
Right, and that net number is it looks like, well, I just want to get some numbers here and an understanding. And you may not have given guidance to the market yet about 2022, but can you give us an idea?
Yeah, I mean, we'll give formal guidance, I think, upon announcing commercial production. Santana is $1,000 an ounce AISC project. So, $1,700, $1,800 gold. We'll be making good money, even in its first iteration of production. Operating cash flow at 30,000 ounces a year at $1,800 gold would be in the order of 25 million. Again, Santana is starting out modestly and will grow. So, but I think what's most important for us and for our shareholders is understanding that a good startup, they don't have to worry about us going back to the market. They have problem with a lot of mining startups. That's exactly what they've had to do. And there have been examples, I won't name them. I think we know a lot of the producers have gone into production in the last couple of years. It's been a trial for them. So the fact that we can already be, I think at the operations level, we have stopped the burn at operations level. We have a very limited corporate overhead. By the new year, we should be making money at the corporate level, not just at the operations level.
Will you be making enough to ensure that you can stick to what you just said, which is you don't need to dip into the market?
Everything, unless we are doing a fourth project or doing some kind of deal, what we have in place right now is sufficient to support the business model without going back to the equity market. Something the bankers hate, but our shareholders should love to hear.
Right. Well, absolutely. No dilation. Fantastic. But so if I kind of then project forward a bit, again, just trying to help people understand the sort of business that you are. Producer now, nice. You'd expect a kind of re-rate. People will say when you get into production, there's a re-rate coming. You didn't get that. And that's possibly due to your friends at Cisco, isn't it?
I think it's a combination of things. The way I'll tackle what I think was causing the lack of re-rate before the Cisco sell, because I was anticipating it was going to take time. It wasn't the traditional re-rate. I don't actually want to be, I'll give an example. Pure Gold were $1 billion market cap, $3 a share when they poured their first gold. And you see where they are now. So if we can stealthily come into the re-rate, I'm fine with that. Because of how we built Santana, without a PEA out there or anything else, I think even more the institutions and investors are saying, this is a show me story. So let's see the ramp up. Maybe we even need to see a quarter or two of financials thereafter. Second half of 2022, I think, is when our share register becomes more institutional, as they see us as not just, oh, you're a producer, well done, but you're doing actually really quite well with this. But they needed to see those filings first to be able to make that decision and determination.
Well, absolutely. There's that commitment. I do want to come back to the Cisco thing. You're also going to need to show and demonstrate scale consistently, right? 30,000 ounces is kind of neither here nor there, right?
Well, and I actually gave this presentation at the Denver Gold Show. The problem with a lot of junior producers is they are forever junior producers. They don't achieve escape velocity from that. They've scaled an operation around a global resource, and that's all it is. It's 45, 50,000 ounces a year. It can't grow. And maybe they've got another project in the pipeline, but by the time that's permitted and built, and maybe the capital cost of it, all it's really doing is replacing the production from the first. So they are these perpetual sub 100,000 ounce operations. When we pick up a project, it has to meet two criteria, really just two. Can we build it? And if we build it in its first iteration, can it grow? And if we see both of those, then we'll do the deal and we'll build it, and then we'll look to grow it. So whilst all our projects start out in that, really in their base case as they scale up is the 50,000 ounce a year operations that are the hallmark of junior producers. Each one of them, we see the potential for them to grow to be more like 80, 100,000 ounce a year plus producers. Now suddenly you've got not just growth from bringing on a series of these mines, but organic growth in each of those. Now you can build up a very impressive production profile with very limited capital cost, and achieve that escape velocity, actually enter the world of intermediates, and leave the junior producer profile behind pretty rapidly.
You had a great response last year from the market about what you're doing, the story that you're telling, the way that you're going about it, and the simplicity of what you're doing, really. Are you concerned now that you're going to need the second project to come online, like 2023, come online before you do get this re-rate? Do you know what I mean? Because the ramp up is, maybe it's not going to be quick enough for the market.
We're building something which I hope can be one of the new growth gold producers for this cycle. A lot of the big companies, let's face it, they can't organically grow. Even the mid-size are having to amalgamate. It's very hard when you're at a few million ounces or 6 million ounces a year to grow organic. They've gone through that exciting phase. So I'm not in a rush to try to do too much too quickly, because I think that's where companies get into trouble. What we are looking to do is be relevant, not just now or next year, but 10 years from now. And I think this 10 years ahead of us is probably the most exciting and dynamic phase of any gold producer. Because you can grow. And so even if at some point during that market, the gold prices come off, a lot of companies are really valued now quarter to quarter on what the gold price does. We can be a true growth story at a time where other companies are struggling because of cost inflation and falling metals prices. And so I'm just about young enough that I can see that 10 years through. We have a young dynamic team that want to build something special.
Okay, let's get on to Cisco. They didn't do you any favors. Yeah. Why didn't you coordinate with them? What happened?
I'm going to start by saying what I have said so many times, more times than people have seen my red wall behind me. We are not the company we are today without the early support of a Cisco. And we are forever grateful for that. A Cisco royalties, when they spun out a Cisco development, they moved a large chunk of their equity book, including our equity, over to ODEV. And in that original presentation at the time of the spin out, they talked about the equity book being a source of potential future funding. Totally understandable. If I'm a shareholder of ODEV, that's exactly what I would want them to be doing with that, instead of lots of equity raises. And they do spend a lot of money. I mean, they went through $70 million in the last quarter. So I get why they're needing to sell. I always looked at that 17% holding in us. I had people that would say to me, "Oh, it's a bit of an overhang on the stock." I go, 17, it's not, because it's so big. You'll have to do something in a very structured, organized manner. I have reached out to them in the last 12 months, earlier this year. I said, look, when you're ready, like with my bankers who know the file very well, let's do a secondary. Worked very well when you needed to dispose on Victoria Gold. Worked out very well for the buyer of your stock as well, but it served its purpose for you. And that way, I take great pride in us having a very orderly market. And unfortunately, it hasn't been handled that way, not through the lack of trying on my part or my banker's part. And I can only speak for us in this regard, but it has introduced disorder to a very orderly market. And I don't think has served our shareholders well, and I share their frustration. But I also think when you are spending a lot of money and you have an equity book, which is a great way to, refresh the coffers, you want to maximize the value of that equity book. So I don't think it served a lot of, probably only served the broker handling the trades well.
Yeah, no, it was lazy. They could have got more money out of it if they'd done if it had been more measured and calculated and you worked together. Okay, understood. But I just wanted you to kind of just say it. It's not like you didn't try. You had reached out. Okay, fine. Is there any more overhang?
Oh, yeah, I would guess. It's like, I feel like it's a game of how many bottles on the wall. And it's like 68 million bottles of beer on the wall, 68 million bottles of beer. I mean, so far, they've only filed for 10% of their holdings. and not surprisingly, you sell 10% to the share and leave 90% there, you create the perception of an overhang. So out of something that should never have overhung the stock, you've created one. Congratulations. There have been a number of crosses this week, no filing yet on those, but the same broker, same action in the stock, another 11 million shares crossed this week. So that would take them down to about 56 million, I think, 50. And for me and my bankers and institutions I know, we'd just like to rip the Band-Aid off. That helps everyone, and that's what I continue to work to do. But it's been frustrating, Matt, because I think for the first time I felt pretty powerless, even though I've been trying.
It was kind of an interesting time, actually. I would be, with my banking hat on, I'd be less concerned at this moment because of the fact that you're producing and able to produce cash now, which is nice, than perhaps if you were still in the development stage, where it could be problematic. It could be a very, very damaging process indeed. Okay, so one assumes that the offer is still there, that you are picking up the phone and saying, "Look, let us help you with this."
Yeah, I did again this morning.
Have they responded?
In the meantime, I'm buying the stock myself. I can't buy 58 million shares, but I've been buying in the market myself instead, knowing full well whose stock I'm buying. But it's a Minera stock issue. It's not a Minera story issue. And as such, you can get past that. If it was a Minera story, like if you've got a leaching problem, if you've got a Relief Canyon-like situation, that's a America's gold and silver story issue. And we saw how quickly that snowballed into a calamitous situation for shareholders. This will pass. I'm doing everything I can to make it pass as quickly as possible.
But have they come back and said, okay, we'll accept some help from your brokers in terms of how getting rid of the overhang completely? I say ripping off the Band-Aid, or are they doing it on their own? Not yet. And it seems it's odd because bankers that have worked with me over the last couple of years, like me, have clarity on where the potential buyers would be. So you would think that would be the best way to fight, to match here. If we're playing a game of stock Tinder, you can go a different route with a different broker, and all you're going to be doing is swiping the wrong way, as far as I'm concerned. Okay. Well, let's see what happens. Let's see how it plays out. Let's see and then the other bit of this, which I guess would be for you in terms of feeling powerless, is you don't know into what type of hands it is being swapped into as well. You'd want to be in control of the type of investor that you've got. And is there any way of at any point understanding who? That's
one of the biggest problems. The stock actually could have been incredibly beneficial for Minera. We don't need to do equity raises, which is how institutions like to get positioned. But now as cash generating, it's like we can broaden our institutional ownership by just doing a secondary, and positioning those institutions that way. That would have been a far more effective way of taking that 17% wedge and making it 17% more institutions in our stock. Instead, you don't have any of that color on where the stock is ending up. I know a lot of people that have been taking advantage of this weakness and this liquidity. I mean, for anyone who ever questioned our liquidity, we've traded 60 million shares in the last 5 weeks. We're more liquid than the Pacific, I think, right now. So, but yeah, it's the lack of control on it. So it's unfortunate, but we'll work through it.
Okay. Look, those are the points I want to just talk to you about, really. It was really just trying to understand what's going to happen with this overhang. Say, well done on getting into production. Not a lot of people do. We can pick up another time and talk about, what's happening at project level, and maybe you can come and talk to one of our analysts, about the technicalities of moving the other two projects nearer into production too. Doug, as always, fantastic to see you.
Thanks, Matt. Appreciate it.